In the United States, there's about 13.5 million accredited investors, and only about 5% of those ever step out of that conventional model of investing.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I'm your host, Todd Dexheimer. With me, excited to have Dr. Alan Lomax. Alan, how are you doing today?
I'm great, thank you. Good to be with you.
Yeah.
Glad to reconnect. You were on my show several years ago.
So it's been a while now, but
it's been about 2 or 3 years. Yeah.
2 or 3 years. Well, wow. Yeah. Well, I'm glad we could connect here and, get you on the show, get some tons of value. And I know you're going to bring to the listeners, so I'm excited to have you on. Give our listeners a little bit of your background, and of course, what you're doing today.
Okay. Well, yeah, great. Thanks for having me, and thanks for allowing me to be with your audience here today. I consider that really a great honor and great pleasure to be with you. So I've been investing in real estate for almost 30 years now, and that's been an up and down journey. Currently, I really am doing more capital allocation than direct investments myself. But recently, I had an experience that kind of clarifies something really very important for me, and that I think reveals a whole lot about my journey. An equestrian friend of mine just recently adopted a horse. His name is Finn. And Finn was about 22 years old, and he had spent his whole entire life really essentially in the show ring. Several months before my friend adopted him, he sustained an injury. But instead of allowing him to recuperate and rest up, his former owners continued to show him. Unfortunately, this really isn't an uncommon practice in the equestrian world. They just dope him up and medicate him and keep him going, and that's what they were doing with Finn.
That's how they're making their money with the horse.
Yep. Yeah. Exactly. Yeah. And so Finn did what horses do. He complied, not because he was thriving, not because it was for his well-being, but because compliance is just safer and easier than resistance. And that experience really struck me as I started thinking about it, because in many ways, I think we as humans often do that same thing. We just go along with expectations. We follow prescribed path. We pursue careers that look successful, and we follow same thing in investing. We just follow traditional investment advice. And we often don't even realize that we're doing it. We're not necessarily conscious of the decisions. We're making decisions based upon conditioning. And so that realization really led me to something that I now see repeatedly. Many of us move through 3 different stages, from conditioning to alignment to finally into to thriving. And so over time, I began thinking about this as a simple 3-step framework. And so that really kind of takes me to where we are today. And you can take the conversation where you'd like to from there.
Yes, that's interesting. The follow the herd mentality, right? Or just compliance, like you said. It's like, I can come up with many things through history. I mean, we all can. We can think of our own personal experiences that we've been through, but you can just think of, like, through history, the compliance that everybody has to do specific things. Or, I mean, shoot, like, look what happened in Germany in World War II. I mean, they just followed the herd, and it wasn't a good thing, right? And so we can look at positives where following the herd has been okay. We can look at very negative things, and I can think of there's many others than just that one, but that one's obviously it pops into your head. But it's pretty crazy to think, and you know, sometimes it's okay, but there's many times where if you want good results, if you want actual to be happy, if you want
Mhm.
to create something, you can't just follow the herd. How do you like what's your framework mindset of belief about breaking away from that mentality? Because it's definitely challenging because everybody's doing it, right? It's challenging.
Well, exactly. I mean, that is where I found myself. I just was unconsciously going along with the way that I had been conditioned
Yeah.
to think and believe. Well, so for me, really, it's a three-step process. It is, I mean, first of all, you have to recognize that you've been conditioned and then wake up and actually become conscious. And then once you're conscious, then you can start redefining what well-being is for you. I mean, you mentioned, the extremes of like World War II when we follow the crowd that leads to kind of extreme conditions. Well, in most of our cases, it's not extreme. We're
Yeah.
just going along because it's just easier to go along than it is to become conscious and
It's just what you
really
do.
you just do it.
Yeah.
And so becoming conscious is the first thing. And then once you really are conscious that you've just been conditioned to do this, then you can start redefining what well-being is for you. And once you start redefining that, then the third step is moving towards a place where you are thriving, really essentially in all areas of life. And it becomes a naturally flowing process that builds multiple streams of well-being where we move from surviving and getting by to really actually thriving. And and how do you do this? Well, I didn't really do it consciously, and I'm not sure that most of us do, but I think we can do it much more consciously when we're helped and directed. And I never reached out for anything but what was comfortable. What it took for me was going through a lot of discomfort
Mhm.
and a lot of loss. And I was actually forced to wake up. And once woke up, then I started developing curiosity and asking questions. And we can go more into that if you want to. But that's the three-step process. It's waking up,
Yeah.
reevaluating, and once you really start reevaluating and get curious, then the process really starts flowing pretty naturally.
I think that's actually a really cool exercise for probably everybody to do, and myself included. I don't follow the herd on it on a lot of things or on many things that I do, but I know I do on plenty of things as well. So, what do you do in your life that you're following the herd? And some of it's okay. Some of it's like that. You know what? I'm fine with that. Like that actually. Like I'm not going to make that change. I'm not going to stop doing X, Y, or Z. I'm totally cool with it. But there's other things you're like, hey, wait a second, is this really the best path for me to go down? And I think so. I think that's a super valuable exercise. Start thinking about your life, breaking it down into different sections, what you're doing professionally, what you're doing socially, emotionally, with your family, friends, all that kind of stuff. And like going, hey, am I just following the herd because that's all I've known? Or is there a better path for me to go on? So I think that's a super valuable exercise. If you're willing to dig into the pain that you talked about, I think that's a lot of value. If you want to pass by that, that's okay too.
Well, sure, I'd be glad to go into that, but I mean, yeah, we all do it. I mean, I was, following the crowd essentially. I was in a career that I loved, and nothing wrong with being in the career I loved. And I was following really essentially, you could call it contrarian investment advice, but it wasn't really, and it wasn't really investment advice that I had really and truly looked into. Well, this isn't uncommon. I mean, the people that I work with are generally high income professionals, physicians, dentists, lawyers, and engineers, architects, so on and so forth. So they're highly educated, they're high income,
Yep.
but they have followed that traditional path and they're conditioned. And so when they go into investing, they are following that traditional advice. Where
Yep.
are they putting their investments? And things that correlate with the S&P, their
Yep.
and their
Stocks, bonds, and
401ks.
mutual funds.
Yep, stocks, bonds, mutual funds, that's where
Hmm.
their 401ks are, their IRAs
Yep.
are at. And that's not bad for at least a portion of their portfolio, but the people I tend to work with, they have 90 to 95% of their
Yeah.
investment capital tied up in those correlating assets that are extraordinarily volatile.
Yep.
And so what woke me up? Well, it was 2008, and I lost almost everything. And at the same time, I lost the job that I loved and that I identified with. And I was at rock bottom psychologically and emotionally. And
You
I
and a lot of other people, right? I mean, that wasn't just a small event. It was a big event that kicked a lot of people pretty far down.
absolutely, and I certainly was. And I was really at the point of actually giving up.
Mm.
So that was my wake up moment. That was when I go, I've got to reevaluate. This just really isn't working for me. And with that reevaluation, I started looking at different pathways, and those pathways have really led me to where I am today, where I uh, have recovered. I have recovered psychologically and emotionally and have a whole lot of well-being and am able to thrive in my life today. So I don't know if everyone has to go through those very dark times to turn
No.
around, and I hope they don't. It's not a pleasant place to be.
Yeah, I mean, I think everybody's going to go through ups and downs, valleys and peaks, right? And so that's just going to happen to people, but you don't necessarily need to go through that. Whereas like you lose your job, lose your investments, you're not sure what like if you want to just keep going anymore. Like you don't have to get to that point of complete despair, but I think it's great to learn and to hear from somebody like you that's gone through that. And I'm, not happy it necessarily it happened to you, but it does teach us things and it does
Mhm.
allow us to go, okay, so this happened to Alan, a smart dude, successful, got a good career, investments, all that kind of stuff. And yeah, he wasn't immune to it. Okay, how can we learn from this? And I know a lot of people that were affected by that were very successful, at least on the surface, right? And and all of a sudden they go through something like that, and you learn from it. So, what like a couple? You talk about you had to reevaluate. Um, Take me through some of those big lessons that you took out of this and the shifts, and how can the listeners really take some meat out of
Mhm.
your story, your experience, so they don't have to go through it themselves.
Well, in prior to 2008, my investment was really in terms of single family and small multifamily, and I was carrying the debt
Hmm.
myself, and I was extraordinarily highly leveraged.
Yeah.
And that worked just fine as long as everything kept going up and up and up. But when you come to recessionary periods, it really can be extraordinarily challenging.
Well,
But
especially if
it
you lose
was
your job. And your
Exactly,
tenants stop paying.
yes. And your tenants stop paying,
Yeah.
yes.
I mean,
And all of that happened at once.
yeah. And be, I think that's what a lot of people, I hear people say this today, even like, well, yeah, I, I'm buying it. It's a little bit overpriced. It's not cash flowing very well, but tenants are paying for it and I got a really good job so I can cover it. Well, wait a second. If you lose your job and the tenants stop paying, what are you gonna do? And that's exactly what happened.
Exactly. That's what happened. And I mean, it wasn't just the over leverage and not really purchasing properties that cash flowed. The investing, doing all of that on my own. I mean, you could only scale so much,
Mm,
and it is always going to reach a point of overwhelm,
yeah.
and you either have to go full time in that and make it your
Yeah.
occupation, or you're going to go under, whether it's 2008 or not.
Yeah. Agreed.
And I realized that, first of all, I mean, I found employment again in the profession that I enjoy being in, and I wanted to stay in that, so I didn't want to go full time into that. So I had to find another way, and that was through investing the way that the wealthy invest. And uh, in the United States, there's about 13.5 million accredited investors, and only about 5% of those ever step out of that conventional model of investing.
Wow. I didn't know it was so low. So 13.5 million accredited
Uh-huh.
investors
Accredited
and
investors.
only 5% step out. So accredited investor, a lot of my listeners know what it is, but I just want to quickly, uh, hit on that just in case you're listening. You're like, what does that mean? It's just a person that has a net worth of $1 million or more, not including your house.
Correct.
Your own personal house, or if you're an individual making $250,000 or married making, is it 350,000 married or is it
I think
300,000?
it's 300. Yeah.
300 married. Yeah. And
Mhm.
there's multiple other things in there that could qualify you as well. And I'm not going to get into those details, but basically if you're wealthy, you're probably accredited and it's even not even that wealthy. Like it's not a
Yeah.
huge bar to hit, especially
Right.
as inflation continues to push.
Exactly.
That bar keeps on getting lower and lower. There's
Yeah.
probably now a lot more than 13.5 as we continue to have inflation kick in. But that's wild. Only
Yeah.
5%.
Only about 5%. But when we look at the wealthy, and these are people with high net worths of probably over $10 million,
Yeah.
we find that they are investing very differently.
Mm,
They, rather than having 90 to 95% of their assets tied up in stocks, bonds, and the S&P, they have over 60% of their investments are put into private placements. About half of that is in real estate. The other half is in energy and other tangible assets. So it's a
yeah.
very, very different mindset
Yeah.
of
Yeah.
investing.
And I
You
actually
did,
read something, and I'm going to totally butcher the stats because I don't remember exactly what it was, but it was at that scale as you went up higher. So you mentioned 10 million, as you go up to 25 million, then to 100 million, then to a billion. That even gets more, right? It's more
mhm,
into alts, it's less into traditional stocks, and it's more into your own personal business. Of course, a lot of those people are personal business owners too, and so that's a lot of net worth. But as far as your just typical investments, it's a lot of it's in alts when you're talking as you go up the high net worth scale.
Absolutely.
So you
But
went, hey, what are these wealthy people doing? And you go, okay, there's something they're doing different than everybody else. Why am I doing something? Why am I doing everything the same as everybody else?
exactly. So that was after reevaluating and really getting curious about how wealth is really developed.
Hmm.
Those were the things that I started looking at. And the conclusions were that if I want to be wealthy, then maybe I should start doing what the wealthy are doing
Yeah.
rather than just following the 95% who have never crossed over that barrier.
Yeah.
And you don't have to be in the $10 million asset range to start doing this.
Yeah, just because that's who's doing it doesn't mean you
You
have. It
have
doesn't
to
mean that
do
you have to
that.
wait until
Yes,
you get there.
exactly. Anyone who finds himself in that accredited investor status
Yeah.
has the capability
Yeah. And even if
to
you're
start
not,
doing that.
you have some options, although less options. You do have some options, even if you're like, hey, look, I got some money. I wouldn't do it if you're like pinching pennies and trying to figure out where you're finding your next quarter to hit the laundry machine. But if you've got some extra money and you're going, hey, I'm getting towards that, what can I do? How can I start to play that game? There are other alternatives for you still to get into. A little more challenging to find some of those, but you can still find them.
Absolutely. Yes. And I wasn't accredited when I began this journey
Okay.
either, because I mean I was before 2008, but
One time you were.
one time I was,
Yeah.
but that went away in 2008. So
Ah,
yes, you can get started in this
yeah.
with even less. Um, and with really that awareness, I mean, I began to look at the whole equation differently. And it became more about rather than just income, um, it became more about strategy.
Hmm.
And rather than working for money, I did like the wealthy do. I put my money to work
Yeah.
for my own well-being rather than me working for that.
Yeah. Yeah.
Um,
What's that goal look like for you as far as is there a whatever a financial freedom number? Is there something that you're aiming towards, or is it just to continue to accumulate and to grow the wealth? What's the goal for you?
well, the goal for me, most people I work with, the goal transforms from actually financial to actually developing well-being. And uh, and so, I mean, there is a financial number and there is a timeline, but that's going to vary from person to person.
Yep.
But the financial number for me is and was when what is the point where I no longer have to work for money and my work money is working for me? And that is the point where I really found, a sense of well-being
Yeah.
and a sense of, you could call it freedom, you could find it
Yeah.
a meaning, and so suddenly my wealth was a tool for not just providing income, but becomes a tool for actually making a positive impact for not just myself, but for others.
Yeah, I think that's amazing to me. That was I was in this. I'm in a similar spot. It's like when I can create enough wealth, when I've got enough wealth, it's a beautiful thing when you have enough wealth that your investments will take care of you and your family and your needs, and that you can then utilize that money also to do other things to help other people and that type of stuff. That's a not that it was like I'm going to retire when that happens, but it's like it just creates a sense of I don't know freedom and feeling of okay, I don't have to. This isn't maybe a worry anymore, um, and I can start to create new things with this. And I can start to help new people, more people, and not that. And I think it's really important for somebody to not hoard your wealth either when you're trying to build it. You still have to take the steps. You still have to give back to others. You still have to do all those types of things. Um, but you can just do more once you maybe hit that kind of number or cash flow, whatever you want to call it.
Yeah, it just, I mean, it gives opportunity. It gives psychological
Yeah.
opportunity. It gives emotional opportunity. And with that, you just have the freedom to live by your values
Yeah.
and to really enhance your strategies based upon your own core values. It makes all the difference in the world.
When did you start working with investors and going, hey, I like this alternative assets. I like real estate. I like passive. I want to start working with other people and teaching them and showing them this is something that's available.
Well, it really started really 5 years ago, and really over those last 5 years, it has really taken that length of time to really develop the system that I can really put out there and really help other individuals. And that really has led um, to what I call the streams to impact, which the idea is really very simple. You begin by developing multiple streams of passive income. And so the point is that you are within a short period of time, you're going to stop exchanging your time for money, and you're going to have your money begin to be the provider for you rather than the work. So you can still engage, like you were saying, in meaningful work. You can involve yourself in purpose-driven living and make greater impact. And what's fascinating is that when we began building multiple streams of passive income, there is, like I mentioned really earlier, there's that internal shift, and
Yeah.
we we make more intentional decisions. We live more authentically. We take the risk that we take are more thoughtful, and we just pursue deeper meaning and deeper purpose. And wealth becomes much more than just financial. It becomes psychological, it becomes emotional, it becomes freedom.
Mm.
Um, I think one of the most interesting things is that we often believe that once we achieve financial success, we'll begin living more authentically, but often
Yeah.
we find just the opposite. When we begin living authentically,
Yeah.
then we tend to start making better decisions. Um, so just go back to the three steps that I was talking about. First of all, wake up,
Yeah.
become conscious, and realize the conditioning you've lived with. And then you can start reevaluating and become curious, and then you can really start developing the
Yeah.
strategy
Yeah.
that works for you.
Yeah. I think you said something there that I want to, and I kind of said it as well earlier, but it's like I think a lot of people on their wealth building journey are trying to, they think they're doing it for a reason, and but they're not actually living that reason they're doing right now. So if you're
Mhm.
building wealth to be able to give back, to be able to, oh, I really want to be able to build wealth so I can have this all, whatever freedom it is. I want to be able to go do these things. I want to be able to create a foundation for my family. I want to do that type of stuff. You have to be doing, you have to be living as you're doing it, right? It just gets bigger, and maybe your life can be more dedicated towards it as you create the wealth, right? But when you first start, if you're going, hey, I really want to give back, I want to volunteer, I want to be able to write checks to foundations and organizations that I really love, and you're never doing that along the journey, I don't think you're going to do that when you get there. And it,
Mhm.
and I think even if you finally, unless you finally wake up, right? But I just, you have to be able to do along the journey. And I think it makes the journey that much sweeter as well if you're doing it along the way and not just at the end, at the final goalpost, right?
Yeah, and recently I've had a realization. A lot of times we think, well, we should be doing these various different things, and they're purposeful and they're well-meaning kind of things that we're doing. I think oftentimes we think that if we're engaged in purposeful activities, then that's our purpose in life. That's our meaning in life. But purposeful activities, though they may be good, that isn't really necessarily what we are at our core.
Hmm.
And I think until we really, really stop and realize what are our values, what is my core as a human being, we're not going to find what our true purpose is. And we may go out and do all kinds of purposeful things. But, like you were saying, are they really a reflection of who and what we are?
Yeah.
And until they are, we're just not really going to find that alignment that really takes us to that next step.
Yeah. Yeah, exactly. Exactly. Beautiful. Um, I want to shift gears a bit here. So what's the asset class you're favoring? Is there a specific asset class you're favoring that you like more than others that you see a good bright future in, or is it multiple? What are you liking right now?
Well, the strategy that I use, that we use with our investors, is uh, is private investing and moving away from the stocks and the bonds and into private equities. But we want those private equities to be diversified, and so uh, I invest in multifamily and self-storage, in uh, in we're looking into at this moment we're looking into medical offices, high flex industrial, and outside of the commercial real estate, uh, oil and gas, because of the favorable tax advantages, essentially, is why we go into oil and gas. But we're also looking into car wash and other businesses that have high equipment usages also for tax liability reduction. So, like they tell you, if the one thing that they tell you if you're investing in stocks and bonds is diversify across that spectrum. But if that's all you're doing for diversification, it's not really
Yeah,
diversification.
I agreed 100%. That drives me crazy. Diversify, and then you're like, well, I got this real estate deal. Should I do this? No, don't do that. Like, wait a second. You just told me to diversify. No, well, we get
Yeah,
this REIT for you. It's like, what?
yeah. Yeah, that's just part of the S&P. People don't realize that, do
Yeah,
they? But
same thing. It's like, yeah,
yeah, we invest directly in alternatives. We don't invest in funds. We invest in directly into alternative investments, and I invest as an LP, and that's what I encourage my other high income professionals to be doing because
yep,
they don't want to leave their careers.
yep.
They um, find satisfaction there and enjoyment there and fulfillment. So stay with it and go into the LP investing and diversify across a wide array of alternative investments.
Yeah. Yeah, that's the thing. Like a lot of, I think there's a big push for everybody that, oh, you got to quit your job and invest in real estate or invest in, whatever, oil and gas or whatever it is. It's like, no, you don't have to quit your job. In fact, I think the vast majority of people are better off if they don't quit their job because you're making good
Absolutely.
money doing what you're doing. You enjoy doing what you're doing. You're good at doing what you're doing. And so instead of quitting your job, double down on your job and then invest in these asset classes passively. Um, that is the better strategy because it just drives me nuts when I see people that have like, I'll talk to people all the time, and I'm sure you do this same thing as well, where you talk to somebody and they're making really good income, they love what they do, they got a family, they're stressed a little bit though, maybe because they don't spend as much time with their family as they want. And then they go buy a duplex in a single family home and a maybe a 4 unit apartment building. And you're like, what are you doing? Well, I got to create this alternative income, blah, blah, blah. I heard it on a podcast. It's great. This is what I'm doing. And it's like, you're creating yourself a second job. You're burning yourself up. You're spending less time with your family. Now you're going to have to either quit your job or sell these stupid real estate investments that were a mistake for you to get into in the first place.
Yeah, and many of the people I work with find themselves in that category. That I mean, most of their investment is in the stocks and bonds, but yeah, they do just exactly like what you said. Well, I probably need to get into real estate as well, and they go out and get a single family, a
Yeah.
fourplex, and a lot of people are going into short-term rentals
Yeah.
because
Yeah. Which is
the
even more
tax
work.
advantage. Exactly. But I mean, they're
Yeah.
attracted to the
Sure.
tax advantages, but it's like, is that tax advantage worth 60 hours a week above your job? And short-term rentals are not a passive investment.
No.
And and a lot of people are just like you said, they're listening to these podcasts, go out there and buy your single family home, buy your short-term rental, and they do it. And it's a second job, and that's
Yeah.
not what they were looking for.
Man. All right. So I get a couple last questions, then and then we'll wrap up here. So, what's a mistake that maybe you've made or you see a lot of other people make that that you work with, and how have you learned from it?
Well, we just talked about the mistake a lot of us make is we listen to podcasts that tell us to go out and buy these single family homes. That's what I was doing
Yeah.
before 2008, and it was a mistake. And what did I learn from that is that there's alternatives, and that's not what the wealthy are doing. And if I want to be wealthy, I need to find another strategy. And that strategy for me has been diversifying through private equities.
Favorite book that you can recommend to our listeners?
Well, it's not a real estate book.
That's okay.
It is it is Grit by Angela Duckworth, and it changed my life, and it really changed my whole entire mindset. Uh, and I read it actually during those dark times following 2008, and it just really taught me that, yeah, I need to take hold of my own life and form my own destiny, and I can do it. And that's what high achievers do.
Yeah.
And
That's a new book. I haven't Nobody said that one, so I
yeah,
appreciate you giving me a different
okay.
book than nobody has said. Last question before I wrap. What are your three pillars of wealth creation?
Well, we talked about those three pillars, and that is consciousness, understand where you're conditioned, and when you understand that, then you're going to reevaluate. And then thirdly, you're going to find the strategy that is going to lead you to your own wealth development.
Love it. Ellen, man, appreciate the time. I got plenty more questions, but we got to wrap up here. How can our listeners get in touch with you, learn more about what you got going on, what types of investments you're looking at investing in, maybe invest alongside you, or at least understand a little bit more about the passive investing field and what that looks like?
Well, thank you for asking that. And yes, I have a free gift for um, in appreciation for having me on your show and for your
Awesome.
viewers and listeners. And there's two ways they can find that. They can just go to LinkedIn. My profile is just under Alan Lomax, and Alan is spelled ALLEN, not A-N, but E-N, just Alan Lomax, PhD, and they'll find my LinkedIn page. And if they'll just DM me, just DM Beyond Paycheck, and I will send them the framework. They can also just go directly to our website, which is www.go.steedtalker.com/beyond hyphen paycheck. And I need to get a shorter URL, but that will
That's all right.
get them.
We'll put it in the show notes so people can actually
Okay.
get to it. Yeah, yeah.
And that will take them directly to that free gift. And that free gift is actually um, a um, a mini webinar, about 7 minutes, but it talks about what we're talking about today. And there's 4 bonuses. The one bonus is actually a financial freedom calculator, which will give them, we talked about what is your number, it will give them the number they need to reach that point where their money is working for them. And what I have found with high income earners, those who are making 300,000 or more a year, they're much further along that journey than what they think they are. And
Yeah.
at the same time,
Yeah.
they're at a point where they could, if they don't make changes, could actually lose it all pretty quickly as
Yeah. They need to
well.
start making changes, right? They need to do it right
Exactly.
now. Yeah.
Exactly. Yeah.
Yeah. Awesome. Again, Alan, really appreciate you. Appreciate the time that you gave us on the show. And you have a fantastic rest of the day.
Thank you so much, Todd. It's been my pleasure.
Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.